AMC stock and the broad markets are going to rip tomorrow, ladies and gentlemen. This is going to be a very exciting video. Hopefully provide you guys some perspective that you are not going to hear elsewhere. A lot of people want to cause fear, uncertainty, and doubt in your guys' minds talking about this CPI data point that is coming out tomorrow, and that the markets will likely crash, and AMC is going to $2. That's the kind of videos you guys are going to see today, just to forewarn you guys. But why am I saying AMC stock is going to rip? It's very straightforward and simple. I've been doing this a very long time. I've been watching CPI reports and studying how the markets move up until those reports and after those reports for the last 2 years now. And what I have found, take for an example today, S&P down 1.2%, NASDAQ down 1.7% heading into this catalyst. Now, the markets expect a high CPI reading, very, very high. A lot of economists are talking about this is the peak inflation number that we are going to see. So those expectations really couldn't get too much worse, and they're not going to get worse heading into tomorrow. So what does that mean? There's a greater likelihood of actually being better comparatively to being worse. So even if inflation, CPI readings come in at expectations, you're likely to see a rally in the markets because we already had this severe down day, and the markets are already pricing in a very bad CPI number for tomorrow. So once that number comes out and it's like, hey, this isn't 20%, this isn't 15%, this isn't 13% CPI, we can buy stocks, we can rally. This is the peak of inflation, even if it's not. That's the market psychology. Now, the most important data catalyst for this week is actually going to be bank earnings and retail sales, and that's the real trickster here, and that's what we need to talk about. So let's get into this video. I hope this video makes you guys a ton of money. I know it will make me a ton of money, so hit the like button and subscribe to the channel for this very valuable information that, quite honestly, you don't get anywhere else, at least in the retail trading community. So let's get into it. So why are the markets likely to rally tomorrow? It comes down to market expectations. What is priced into the markets? What is not priced into the markets? The down move that you are seeing today is pricing in the possibility of getting a higher reading on inflation, a higher reading than expected. What are the expected numbers? 0.5% month over month core CPI for March, and year over year CPI of 8.4%. And usually CPI comes in pretty much right on expectations, and a lot of economists believe this is going to be the peak month of inflation. So obviously, if inflation comes in over 0.5% month over month, markets are going to freak out over that. It's going to be a panic attack. Is that likely to happen? Probably not. You have food prices that are going up, energy prices that are going up. They have since come down a little bit, and you have used car sales that have come down dramatically. So they're kind of getting offset a little bit there. Still going to be a very bad rating, still going to be very high, but it's likely to come in at those 0.5% expectations or a little bit higher than that. Now, the markets are down today. They're expecting very bad numbers. So if they come in even a little bit better than expectations, that's going to be a very, very bullish thing for the markets. And the NASDAQ down almost 2%, 1.84%, and the S&P down 1.25%. It's baking in a lot of that bad news. So do not get fooled just because people are going to say, hey, CPI data is coming out tomorrow, markets are likely to crash. Well, that's actually not the case because the markets are expecting a very high number. You have to get a number that is higher than 0.5%, probably 0.7%, to see a substantial down day in the markets tomorrow. And if CPI comes in at expectations or it comes in under expectations, stocks like AMC are going to rally. Stocks that need inflation to be low to keep rates lower for longer, they're going to rip. A lot of your high growth stocks like AMC. Now, why is lower inflation or inflation coming in even at expectations a good thing? Well, it says possibly, hey, maybe we're right. Maybe this is the peak of inflation. Maybe the Fed won't have to act as aggressively. And it all circles back to the Fed. So that in a nutshell is really why the markets are likely to rally tomorrow. They're already pricing in the bad news. It really has to be worse than what the markets expect, and the markets already expect this to be a very, very bad CPI report. So the odds of the markets dropping in a very substantial way, like 2 or 3%, very low at this point. If we had a green day of 1 or 2% on the NASDAQ today, this would be a totally different video, because obviously the markets wouldn't have been pricing in a very bad CPI report. So that's very important to know. I just don't want you guys to get caught up and lose a bunch of money because you watch somebody else say, hey, the markets are going to tank tomorrow. We're going to, shit is going to hit the fan. That's not the case based off of the CPI data. Now, I could be wrong. I'm not a financial advisor. I don't know what the CPI numbers are going to come in at. So take this into consideration. Play things small if you're going to play them at all. On the other hand, what is really going to hurt the markets this week? It's not CPI. It is actually bank earnings. And the bank earnings really start to roll out Wednesday pre-market. You have JP Morgan. You also have First Republic Bank. And why are the bank earnings really the most important thing for this week, as well as retail sales? That's going to be the other thing that hurts the markets potentially on Thursday. Well, the banks are going to give us a bunch of data on the consumer. So the markets really don't care about too many things right now. They're starting to get over a lot. We've seen a lot be priced into the markets for a while, like Russia, Ukraine, even the Fed acting more aggressively. What is really not priced into the markets all too much is the possibility of seeing a recession towards the end of 2022. If the banks come out and say, yeah, the consumers, they're not spending as much, they're really holding back, the loan volumes have really started to drop off, that's what will clap the markets. That is not expected, and that is not priced in. So I don't know exactly how these things are going to play out. I'm laying you the groundwork of, if this happens, this is going to happen in the markets. CPI really is not a huge catalyst right now, in my personal opinion, especially after today. These bank earnings, how the consumer is doing, what is our chances of seeing a recession in 2022 here in the near term future? Are we in a recession right now? That's the most important thing. That really starts to come out on Wednesday, and then on Thursday you get a vast majority of the banks with Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, PNC, and Ally Bank pre-market Thursday. But JP Morgan, as well as First Republic Bank, and even BlackRock to a certain extent, those are kind of going to pre-shadow what to expect on Thursday. So, you might see a down day tomorrow. It will not be caused because of CPI, unless that CPI number, like I said, is higher than 0.5%. Really, like 0.7% is going to be that level where you could really start to get a lot of panic in the markets. But it comes down to the bank earnings as well as retail sales. Retail sales do come out on Thursday. I believe that's at 8:30 in the morning as well. Let's go ahead and find exactly where retail sales are. And it's on Thursday, so it's the last day of trading for the week, because we do have a short week this week. So it's going to be important to see what that number is. Retail sales, how that comes in at 8:30 in the morning on Thursday. And then that'll kind of give you a glimpse into what to expect on Monday. I think this week and next week are going to be very important, and they're kind of going to set the stage for the markets for the rest of the year as far as those recession fears. What is our likelihood of seeing a recession, and how the other companies' earnings are likely to be. If retail sales are bad, bank earnings are bad, then other companies' earnings are likely to be bad, and that will probably rapidly get priced into the markets. So that is basically what you guys need to know. CPI data, highly unlikely to tank the markets tomorrow, especially after the red day that we're seeing right now. The bank earnings and retail sales, that's going to be even more important. I think there's a lot greater chance of actually seeing a rally tomorrow comparatively to a continued drop. Now, let's switch focus to AMC stock. AMC is below the 50-day moving average, which is at about $18.45 per share. We're currently sitting at $17.87 per share. So we are under that, but we're not really flushing under that. We're not really buttering under that key level. If tomorrow is for whatever reason a very red day, then you're probably going to drop down to about $15 per share. That's going to be the key level. That's going to be the main level to be watching for. But AMC has pretty much been a falling knife. So I like to catch falling knives. Sometimes it works, sometimes it don't. But especially with AMC stock, I think it's a really good time to buy the stock. Even today, look at this violent move we've seen right off of the open today. We were up like 1.5–2% in the first half an hour of trading today. You definitely want to see that move, or I should say, the stock wants to see that bounce, but there's a lot of negativity or possible negativity that is weighing on the markets for this week. Tomorrow, you're going to get a lot of that negativity lifted once that CPI report does come out. So that's a baseline fundamental view of why I think the stock is actually going to rally tomorrow. Full circle, everything we just talked about, as well as the stock continuously going down. It looks more probable that we will see a rally tomorrow comparatively to a continued drop. Now, we do need to get into AMC specific data. And for the option flow for the day from institutional investors, you're looking at 8 orders totaling $844.55 thousand, positive order value of 21%. So it's not looking all too positive from institutional investors, and obviously not. They love to short the stock during volatile times in the markets, during uncertain times. But you are seeing the short interest ticking up yet again today. Current short interest of free flow at 20.6%. Current shares that are sold short of 106.17 million. Cost to borrow max of 2.73%. Share utilization of 100%, and the days cover at 2.38%. So looking pretty damn good in that regard. Once we do actually see inflation, if it does come in under expectations, that's going to be a big catalyst for a move to the upside, especially bank earnings. It's really a toss-up. I really don't have any definitive conclusions off of any of this information. I don't know how bank earnings are going to go. I don't know how the consumers are going to go, but what you can do is look around you. Are people still going out to do things? Are they going on spring break vacations? Are they cutting back on things? That's really where you guys can try to come to your own conclusions on this. But by and large, when I'm talking about trading AMC, maybe with options or trading the markets based off of these catalysts, I think it's a lot safer to wait until after and then play the after move instead of betting on what direction the markets are going to go beforehand. So that's really what I plan to do. That's the rundown, like I said, why I think the markets will actually rally, and that's the Ortex data that you guys need to know. As far as the rate hike increase probabilities, for May 4th, obviously 0.5%, and all of these, the next 1, 2, 3, 4, 5, and 6 meetings, you're expecting a 0.5% rate hike at every single meeting. If inflation does tick down, you will see these probabilities actually go down, and that's why the markets will rally. Less potential rate hike. So those are really going to be the keys. As far as AMC, the stock tracker data is confirmed or concerned. Let's go ahead and take a look. So you have 245,000 calls that are out of the money, 10,000 calls that are in the money. That's going to be important if we do see that bounce tomorrow. You're going to see a lot more weekly option activity coming in from retail and institutional investors, and that's definitely going to push us up. Do not get that confused. Now, we've seen a little bit of a bounce earlier in the day because this consumers 3-year ahead inflation outlook drops to 3.7%. 1 year ahead inflation outlook rises to 6.6% in New York Fed survey. So the long-term inflation expectations are going down. Short-term inflation expectations have ticked up just a little bit, but the longer-term inflation, that is really what matters a lot, because long-term inflation, long-term investing, they go hand in hand, right? A lot of people, they're obviously going to be investing for the long term, so they don't really care too much about the 1-year inflation expectations, but it does directly correlate with the Fed. Now, something else to keep in mind is these Shanghai lockdowns. If the lockdowns in China continue to get worse, that is really something I don't think the markets are fully pricing in right now, and that could start to hurt the markets a little bit more. So that is pretty much going to be all for this video. That is really what you guys need to know. Just a quick look at the technical outlook here. We're down 2%. If we have a really bad CPI report, if things get really bad, then we're falling down to $15 per share. That is just a simple fact here. I don't think you're going to go substantially under that. It is possible, but I wouldn't put my dollars on that at this point. I think there's a much greater chance of actually seeing a bounce, and I think AMC is primed and loaded, cocked, and ready to see that explosive rally. So mark my words on this. I believe in my heart that I'm going to be right. This is what I would tell my mom. This is what I would tell my clients if I were to be a hedgy baby, and I'm not a hedgy. So I work for you guys. Thank you guys for tuning in. Really not too much else to actually add. The technical analysis, I mean, basically the same from the weekend video. Not too much has actually happened. MACD, really bearish. RSI to the oversold side. We're under that 50-day moving average. That's going to be important. We either break above that or we break down under that to $15. If we break under that and we see a big bounce tomorrow, then you're headed into $21 per share. That's a simple fact. So that's basically going to be all for this video. None of this is financial advice. Always come to your own conclusions. Do your own due diligence. Really, that's very important. I wouldn't gamble on what direction you think the markets are going to go based off of these catalysts. But if you are a degenerate gambler like I am, like we are on this channel, then you probably want to play the after move. Wait for the confirmation of up or down. Play that move. Don't gamble on the actual catalyst. So this is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Come join us on the live stream every single day in between 10 and 11 p.m. Eastern Standard Time. We'd love to have you over there. And if you guys want to come trade with us live in real time, we've been hitting some killer trades today as well. We got the Neo calls, and those babies are starting to print. So that is linked down below in the pinned comment, and go follow me on Twitter as well, also linked in the pinned comment. Thank you for watching, and I'll see you in the next one.